Yo, what's good, everybody? Shut these captions off. Um, I appreciate you guys tapping into me real quick. Um, I wanted to wait, let me see here. What is this? Oh, I didn't even. What's up, everybody? Hey, I appreciate you tapping in with me tonight. Um, I think I messed up the settings. Let me see here. Uh, hold up, y'all. I'm just trying to fix something real quick. I messed up the settings in the chat. I just want to make sure everybody can join so I don't have to admit them one by one. I messed up. Okay. I think it's fixed. I hope. All right, cool. Um, I appreciate you guys tapping in with me tonight. This will be recorded. I'm not going to do it like the last time where I didn't record it, but this will be recorded. I wanted to just pop on here and give a focused training on specifics, more specifically with this Hewlett Packard trade that went crazy these last couple of days. Shout out to Nora Wolf in the Wealth Squad who hit on that trade. I hope there were actually several others of you who got into that trade. Um, so shout out to you guys for just tapping in and listening. Like, look, I want to help whoever wants to listen to me. I don't have time for the people that don't want to do the work and don't want to, or they're too busy. I want to teach the people that have the work ethic that you're going to put in the time, you're going to put in the effort, and you're going to hold yourself accountable to the work that you're doing. Because I'm telling you, I hit my first six-figure trade in no time at all. Kia hit his first six-figure trade in no time at all, and you guys see it over and over and over again. The amount of people who are so successful in the Wealth Squad, and look, I get it. A lot of the times too, when we get into trades and we hit that buy button, it immediately goes against us. It happens to me too. It happens all the time. When I took Kia's trades, when I took Chris's trades, that's I kept getting smacked all the time while other people were hitting on 5, 6, 800% plays and I was getting smacked 30, 40, 50, 60, 100%. So I've been through a lot of the things that you guys have too. And I still get smacked on trades too. Not every one of my trades hit, but I'm telling you, when they hit, they hit. Um, so look, shout out to, let me see. I'll turn my video on. It's terrible lighting, but um, I'll turn my video on. But anyhow, y'all, I appreciate you hopping on here. I'm not going to take a long time because there's another Wealth Squad training tonight um, with Ashley. So with that being said, let me share my screen with y'all real quick. If you got any questions, just dump them in the chat and I'll try to get to them. But I ask that y'all just keep it specifically to what I'm talking about. Any of the other trades and things like that within the squad, y'all can ask me in the chat. You can tag me. I'm happy to answer them for you if I get to them. All right. So look, y'all, for anybody who's new in here, I drop trades in 3 different areas, right? We drop it in the research admin channel. This is a channel that I expect y'all to pay attention to. This is where I give market insights, trade ideas, things that are happening, um, that sort of thing. So research admin is one of those channels. The other channel where we say we're in this, we're in this, we're in this, or we give analysis specifically to options is the current option ideas. That's the second spot. The things that I post for you guys in research admin, it's my expectation that you go and you look at it, you pay attention to it, and look, if it resonates with you, awesome. If it doesn't, Well, that's great too. If you want to talk about it, then it's my hope that you guys will take those questions and take those charts and go talk about them in the community peer group of the research chat, right? It's research admin for a reason. Research admin, it's research that I've done, it's homework that I've done. All of the things that I post for you guys, I've done a lot of the work to get it to a place that I feel convicted enough and I feel confident enough to pass it along to a group of 18,000 people, right? I don't think y'all really understand the amount of pressure that's on a provider's shoulders, carrying a community of 18,000 people. Plus, we probably got more than that. I don't know. It's a lot. So all of the things that we post, we don't ever want you guys to lose money. It happens. I apologize in advance for it, but all of the things that we post, we've done analysis on to sort of bridge the gap to where you guys aren't working as hard for it, right? That's what we get paid to do, for Chris and Crystal, right? So don't sleep on this channel, y'all. Everything that I post here, think of it and treat it as if it's already a banger trade, because that's all I'm ever posting for you guys is banger trades. So anyhow, I posted this on the 22nd. I gave a list of six tickers. Cisco went crazy, Hewlett Packard went crazy, 3M went crazy, Zim, APD went a little crazy. Zim and Apple got cooked of that list. But the other four all were profitable trades. All were 100% trades. So you could have hit a lick on all of these trades, had you paid attention. And the thing that I want to say about this within the channels is that, look, if you're not as active in the chats and you got day jobs or whatever it is, you got careers, you're busy, make an effort to just scroll through the channels of where we post. The whiteboard where Chris and Crystal post, and Ace, and the current option ideas where me and Kia are always throwing out trades. The research admin, scroll through these channels every day, a day's worth of post, right? And you're never going to miss our trades. If you scroll through the chats every day, you scroll through the channels, right? Scrolling through the chats is a little cumbersome. But if you scroll through where we post our trades to review it, if you were absent from the Wealth Squad for a day, go back and look at what we posted for that specific day, and you'll never miss our trades, regardless of the notifications. We have a giant server, so LaunchPass can't handle all of us. There's nothing that we can really do about it. So you guys have to make those efforts to do your part. I'm going to do my part. Kia's going to do his part. Chris and Crystal and Ace, everybody else, all the providers are going to do our part, but y'all got to meet us in the middle. We can lead you to the well. We can lead you to the bags, but y'all got to do your part. Anyhow, that being said, I posted about the Hewlett Packard to look at this trade here, the call entries. And when I post these trades, I give 2 targets, 2 to 3, maybe four targets. And the idea behind this for me is to give you guys short-term targets, right? Just as a means for you to manage your risk, to take your profits quick, that you can get in and get out and move on from trades. Now, a lot of these trades go even further, and I try to give a continuation of these trades. But essentially, when I'm just putting these together for you, I give you a set of targets that you can put on your charts for yourself to give you something to aim for. And then that's it. It's out of my hands from that point from you guys. So at that point, it becomes where you guys really have to manage your own trades. I can't micromanage the trade for everybody, but I do my best to keep everything intact and to keep everything clear for you guys in terms of communication, and to let you guys know what I see, how I see it, just so that you guys can understand it, right? So I'm just here to educate you and to provide you the information that's going to help you be successful. But you guys got to do your part. So anyhow, when I posted this trade with all of these, I said that it had a strong stage 1, stage 2 money flow of entry points for swing trades to get into. And for everybody who's new, um, that have followed me. Hold on. I'm going to do something real quick, I think. I just want to make sure everybody's muted. All right. I just wanted to mute everybody. I was hearing other sounds. All right. So posting that trade on the 22nd. Posting that trade on the 22nd. So let's see here. Is my screen shared with y'all? Yes. All right. So popping over here to this is just in stock charts. So one of the things that I noticed about this trade is that so just like what we learned from Gerald Peters, Full Auto 11 on Instagram, YouTube, with the money flow, everything moves in four stages. That stage one is always the sideways consolidation. And so that's what I was really looking for. And when you're looking at charts, it's good to take a macro approach to it where you zoom out of the trade, right? Where you can see a bigger picture of everything. Now, if you look at this, this is the Hewlett Packard chart. Now, if you look at this right away, you can already see pivot points, anchor points of where the stock shifts in price, and then also where it sort of consolidates sideways. I can see these right away from the chart. This is a perfect money flow pattern right here, perfect money flow pattern here, and then sort of here as it's going to the downside. But if you look at this, it has all of these anchor points of where it pivots, right? So straight away, what I do or what you guys should be doing is drawing these pivot points on your charts of where this price pivots. Because if you map this out for yourself, you're going to be able to see trends and patterns that are consistent with the past that help you to understand price action movement. Right? This is a pivot point also too, because this is moving sideways and then this is where it breaks out. Now, if you take this, there's an auto support. If you're in stock charts, there's an auto support resistance line here. Now, if you take this, it tells you exactly where to buy it. It tells you exactly where to sell it, right? With the little as it turns red to green. So if you take these points where it pivots, you can see these specific areas of where this will break out. Now, I marked this in two different areas. I marked this in this area right here above these candles because this is where it goes sideways. And right above where this goes sideways, that next jump was where it breaks out and it runs to the upside. And where that is at the base of this candlestick here on, it looks like back in June, right? Now, if you follow this all the way over, you can't really see anything on the baseline for this area here. You can see it on the base here, and I'm gonna slide over to trading view here in a second. But if you look at this, the support line started sort of around the 19th, 20th of February, and obviously it's running until present day of where we're at right now. And then if you look at that higher candle of where this breaks out here, and also where this pivots here to the upside, where this also begins to pivot, this becomes where it's going to break out. Now, above this line, above this consolidation box, which I'm going to show you here, I was looking at specifically a few things. Now, I let you guys know about this on the 22nd. So what I was really looking at was I was looking at this gap here. Now, I always tell you guys about trading the gaps. This doesn't look like a big gap on this chart, but it is. In terms of stocks that are slower moving, like Hewlett Packard, Pfizer, the energy stocks, these slow move. I mean, this was basically moving from 1495 to essentially 1425, 1430, right? And if you notice, this is where it got pushed down. And right where this got, and I know that by the wick on that candlestick, right? So the wick of where that got pushed down on the 18th of February is the same place where this got pushed down, or where it opened at, same place where this opened at. This closed a little bit below, but it's where this all sits on it. So at this point in time, you have 3, 6, 7, 8, 9, 10, 11. You basically have 11 days worth of consolidation of price action testing this very specific point in price. Now, to me, that says, okay, the minute that this breaks through this price, think about it like a slingshot. And every day that it goes forward, it's pulling back this slingshot, or it's filling up the car with gas, right? That's how I think about this consolidation sideways. And it becomes very easy to see when you can visually use it as a metaphor to help you understand it, right? So every day that this moves forward in consolidation, meaning it's going from left to right to present day, it's literally pulling back the rubber band of the slingshot that's gonna launch this thing into orbit when it breaks this price. So, and as you can see, I noticed it. This consolidation I noticed here, and I was cognizant of this right here, of this candle, because I knew once it broke through that previous day on February 20th, which was also sort of the baseline for the, and it's not totally accurate, right? It's sort of the baseline of this candle. And if you take this over, it's also where this got pushed, where this also got rejected from. So looking at it to break through above this, I knew that this is going to be the next gap that it's going to fill. And then once it surpasses this, that's where it takes off, right? So me posting that chart was for you to understand this is in a stage one. What do we do in the money flow? We only buy stage ones. Only buy stage ones. You buy the stage one. It doesn't matter if it goes over and consolidates for 30 days or 40 days. It's going to build up your position. It's going to build up the momentum for it to run to the upside, right? So once I put it out to break through this candlestick here on the 22nd. It comes up here, breaks through this day, gets back to the 15, 27, 28, whatever that was, rejects it again, and it falls. It doesn't fall far. Where does it fall? It falls. So if you're doing your support and resistance levels from the start, as you're getting to these highs and lows of certain areas, right? Specifically this candle, if you mark this, and I don't generally go from the wicks of the candle. I'm just doing this for the example's sake here. I'm just trying to change the color to change it red so it's easier for y'all just to sort of see, right? So you can do it by the wick of the candle, but even if you don't do it at the wick and you do it at the body of the candle, you see that it's pretty much the same. It gets right past that line there. And then what happens? It retracts and goes to the upside. So when I got into it, or whenever I called it out, those contracts were $25, right? It goes up. I think it went up to 60 or 70, and then it falls back down, comes back down to here, and then it falls to like 15, between 11 and 15 down here, right? And because it didn't go lower than this, this ends up being a point where you can take this even higher, meaning to double down on your position, to lower your average, because these also had a lot of time. This also had almost 3.5 weeks left. So in Nora Wolf's case, she got into it whenever she got into it, right there. I believe she got into it on March 1st. March 1st is when this did go lower, right? It got smacked on March 1st. This was the day after their earnings call. But then after that takes a tank to the downside, it just rallies and it breaks through this huge resistance level from at 527, and it goes to the upside. Now, my thought process was that if this breaks the 527 level, I'm looking at all these different gaps. I'm looking at this gap here. I'm looking at this gap here. Um, this gap is important also. But then from these, once it breaks, say, hypothetically, it fills these gaps, what's next? And if you look what's above that. You've got this gap, you've got this gap, this gap, and this gap. And where does it go? It goes exactly above all of those gaps here. It breaks through all of them. Now you can take this on a lower time frame and go look at specifics on say a 4-hour chart or a 30-minute chart of each of these candles to map out the intermediate levels within these candles. And I guarantee you that it'll match all of the data that's back here for Hewlett Packard, the further back that you go, um, of where this is, right? So this becomes my thought process of everything of I'm looking at the ways of the money flow, and it's all clear. The further back that you can track this data, the easier these levels are to see, the easier the trends and the patterns are to see. All of it is so apparent right here of what this could have possibly done. Right? At minimum, this goes back to 17. Why do I say it goes back to 17 on minimum? You know, some people are going to say, oh, you can't predict the stock market. You don't know. Nobody knows where it's going. Nah, bitch. We know. We know in the Wealth Squad where it's going. It's all about finding the consistencies and patterns of where things hold price for a prolonged period of time. And if you look at this, this held price at $17 all the way back from the middle of June all the way until the middle of January, right? So to me, I mean, look, that's almost 8 months. That's a given for a swing trade from whenever we first saw this at 15. Whether you traded shares on it, whether you traded options on it, this and then at the time when I saw it, it was also when the computing, the software stocks were all starting to shift and go crazy too, right? Because this was also with SMCI and all of the other computing chip stocks. When those stocks are all going crazy, that's where the whole entire market goes. That's where they look. I don't look in the same places that the whole entire market is looking. I go to try to find the needles in the haystack that are within maybe the same sector, but I try to find the ones that are coming out of the woodwork with a lower amount of volume, that are maybe sort of shifting in sentiment to the upside and starting to gain that momentum. So that's where I saw Hewlett Packard. That's why I put it on the list. It's the same reason why I put on 3M. It's the same reason why I put on Cisco. All of those stocks were in the same relationship within the money flow, within the momentum as I saw with Hewlett Packard. So good for Nora Wolf for paying attention and tapping into that trade and seeing it all the way through. Now, the other thing to ask that I know you guys ask me all the time is like, well, how do I know? How do I know it's going to run that high? And how do I know that I shouldn't be taking my profits? Well, look here. If you go back to June and you just map all of these out, right? Now, if you've got these big candles, you've got to break this down on a intraday level. You got to dig a little bit deeper. But I'm paying more attention to a day chart of what a stock price action movement is gonna do, right? The day chart gives you that confirmation. Whereas if you go to the intraday charts, the 30-minute time frames, the hour, the 4-hour, they all speak different languages. So they're not going to say the same things that a day chart does. So therefore, you're probably going to get stopped out of your trades early. You're going to take your profits too early because you're putting more weight on the lower time frames than you are the bigger time frame, meaning the day chart. The day chart tells me what are the possibilities of the day, right? That's what I'm paying attention to. I'm not paying attention to the hour, the 4 hour, the 30 minutes, because I'm not really day trading. I'm swing trading. I know that the best trades that I've ever gotten into in the Wealth Squad have all taken probably 3 to 12 days or more. Really like 3 to 18 days, 3 to 19 days for me to come to fruition. Most of the time, it's usually about a week. If it happens sooner, awesome. But for the most part, you need to be going into your trades with the idea in mind that you're going to swing trade it, not day trade it, right? Because the best trades take time. It takes a little bit of time for the internet to catch on. It takes a little bit of time for things to circulate the market. You have to give things time to make its rounds. Your job is to be able to get in at a good entry place. But if you're mapping out these levels ahead of time, let's just say, for instance, you're mapping that you're in this trade already and you're mapping this out. You've put your targets there all the way up to 1556. And you're like, well, Michael, what's the next target? What's the next target? What's the next target? I did a training on this too a long time ago. But you can map it out here. Boom. You got another target at 629. You got another target here at 1668. Boom. Right. And you look at all of the stocks of where this runs through, all of the things it retracts from, all of the pivot points, all the anchor points of where each of these levels goes. Right. You take the one way up here at 1746 ish. Right. And it obviously blasts through that. Now, when you get to a level up at the top where you don't have anything to compare it to, what you need to use is the average daily range or the average true range. And what that is the price action movement of the day, right? So for Hewlett Packard, the average daily range is roughly 63 cents a day. Now, this is a little bit skewed because it's ran so high, but as of right now, it's 63 cents a day. So when you don't have another level to the upside to compare this to, and you're confused about what price target you set this at, add the 63 cents to your previous target. And that is the point where you take profits, right? Every single one of these targets, you should be scaling out of your trades and securing profits for yourself. If you don't, you have to be okay with getting smacked in the face. That's the only way to put it, right? If you buy 10 contracts, we've set 3 targets, then I would be scaling out a quarter at each one of these targets, or maybe less. Maybe you only scale out 2 of those 10 contracts at every single target. If you bought, as in the case of Nora Wolf, she bought 100 contracts. So she has leverage to scale out of that trade at whatever point she wants. Maybe she bought more than 100. I don't know. That the 100 was what I saw of what she cashed in on. But you can take your profits at whatever level is comfortable to you. And look, if a trade goes to 1,000%, you got out at 50% or 100%, don't sweat it. There's always going to be another banger trade. There's always going to be another certified platinum trade. Your job is just to find them. And they're much easier to find than what you think. You're just not looking hard enough. You're not looking at the charts enough. You're not pinpointing the areas of momentum enough. You're not looking at the patterns hard enough to be able to distinguish these things that could potentially happen. Now, will they happen? Sometimes they don't. And if they don't, it's okay. You have to treat it with, I'm going to dust off my hands and I'm going to go to the next one. Because all of the trades that you get into and say you get smacked in the face on, all it takes is for one trade like that, one banger trade like Hewlett Packard to supersede all of those losses that you just took, say, last week or the week before. But it comes down to how you're able to interpret the data. All the screeners you use, that I use, if you don't know what it means in each one of those parameters, it doesn't matter what screener you use because you don't know how to interpret the data. You don't know how to interpret it to the chart. and what it actually means in terms of momentum and whether that's to the upside or to the downside. Now, I don't really play puts. I play puts every once in a while, but rarely ever, because I always joke around and say I don't play puts because I'm not a negative person, but it's true. Somebody on Twitter said, "Damn, every trade I get in, it goes the opposite way every single damn time." Well, to me, I say I'm not surprised with that shitty mentality, right? That's your perspective. Your perspective is every trade I get into, I'm going to lose. Well, that's not my perspective. Every trade I get into, whether I win or lose, is it has to work or it has to work, period. Supreme confidence trumps all, man. Like, if it works, fantastic. If it don't, so what? Move on to the next one. You have 7,000 opportunities a day to go and get money, and you're crying about one trade where you got smacked. You can change it all in 30 minutes. She hit this trade in an hour in, from like when the market opened for 9:30 till 10:30, 10:40 when she cashed out. Right? Granted, it took 9 days, but the point is, you guys put in the work. Her situation can be your situation. It's happened numerous times over and over and over again in the squad. But that's what I saw with this trade. Those are the things I was thinking about. That's how I was analyzing the trade. That's how I was interpreting this to sort of hit. Now, Apple got cooked. Zim got cooked. What was the other one? The other one got cooked. It just went to the opposite direction. It didn't do what I anticipated it might, and sometimes it doesn't happen, and it's okay. That doesn't mean that it's a bad trade. Doesn't mean that it's a bad trade. The setup was there. You just can't control some of the other factors of the market and the way things move, because it might not have had anything to do with the other stocks. It might have had something to do with a sister company or an affiliate or a partnership or some news thing that circulated, right? It just kind of all depends. There's so many factors. The only thing that you can control in the market is your effort to show up, to do the work, and to be the best at what you do. That's it. That's it. I know that I can pull up a screener and I can pull out a stock and print money at will. I know that because I've done it over and over and over and over again. And let me tell you, if you've done it once, you can do it twice. If you've done it twice, you can do it 3 times. If you've done it 3 times, you can do it 4 times. Y'all got to believe in yourself. You guys got to have the confidence that you are an assassin in the stock market. That's how I feel about myself, right? I don't need, somebody to tell me that I'm great or whatever else. Like, I know that I'm great because of the work that I put in. And I'm confident in the results that I get. And I'm just here to help support y'all in your own journeys, to help educate you on the way that I see things, that maybe you'll take some of the tools from my tool bag and put them in your own to help make you a better trader or a better investor, right? All these things are shifting, right? I always say it, options give me options. I want y'all to really think about that. Options give me options. It does. It's cash flow. Use the cash flow from options to do whatever you need to do in your personal lives or your professional lives to escape the rat race, to escape into time freedom, right? To buy your 1 Bitcoin or your 5 Bitcoin or whatever it is. Use the options cash flow to put you ahead. Take a percentage, pay your taxes, right? Set it aside for your taxes, pay yourself, and put it into the next thing and go right after it again. That's it, y'all. That's what I saw on the trade. Those are my thoughts on everything. Let me scroll through these comments just real quick. Kayla says, so basically we are marking where price is struggling to break through. Correct. That's called resistance. On the base of that, where it bounces off every time, you should be marking those too. That's called support, right? And then once it breaks through the resistance at the top, that resistance then becomes the support. Why? Because then it goes below, that resistance point is below the share price. Sherry says, what's a good video in the squad to help with psychology? Sherry, you're listening to it. You're listening to the training on psychology. That's it. Have your parameters set, y'all. Like, have your standards set, your boundaries. Look, I don't care how much money I make on a trade. I'm scaling out of my trades every 25 to 35% every time. It doesn't matter if it goes 2,000%. I'm still taking profits every 25 to 35%, depending on the trade. Sherry says, I'm not patient enough. So do the things in your life that will make you patient if you're not patient enough in trading, because the way that you govern, like, here's my thing. Why would you govern your life as a trader or an investor any different than the way that you would govern your real life with your families, with your husbands, with your wives, with your kids? Why would you govern your life any differently? Why would you be organized and put together and communicate in your relationships within your families, but then when you get to be a trader and investor, you panic, you're reckless, you have no patience, you cry? Look, I take that one back. Look, we all cry. I be crying in my personal life too, so that's okay. um but all the other ones, why would you be any different? It all goes hand in hand. You know, there's a saying, as me as an actor and as an artist, art imitates life and life imitates art. It's all of it bleeds together, right? Life feeds art, right? Life feeds art. So what it is that you're doing in your personal life, or the things that you're panicked about, or anxiety, you got anxiety about, or that you don't have that mental clarity, it's affecting you when you come and try to trade in the market or you try to invest, because subconsciously you're thinking about all of the other things that are holding you backwards in your personal, professional life, or whatever that is. It's very hard to differentiate the two. It's very hard to separate them. You have to have the mental clarity to come into the market, um, not being bothered by those things, right? That you can sort of flip the switch and shut it off. So that's my take. And I hope that's helpful for somebody. It's helped me tremendously. Um, I when I was in the Navy, I used to train with the Navy SEALs right as I was getting out of the military, and I was training to be a search and rescue swimmer, and I was one of the fastest runners on my ship. So I trained with the Navy SEALs a couple on numerous occasions. One of the first things they ever taught me, or they taught our group specifically, was box breathing, right? That activates the vagus nerve. And what it does is that in high pressure situations, if you learn how to box breathe, it it keeps you calm, keeps you calm in those scenarios. Like, my trades have gotten smacked 80, 90% multiple times, more than I can count. But a lot of them have come back to hit for 200, 300, 400% too. I don't get upset at my trades. Do they hurt? Yes, they hurt a little bit, right? Because I don't ever want to lose money, but I move on to the next one. I don't get upset about it. One, because I don't trade with money that I can't afford to lose, or money that I'm not willing to go to zero with, right? There's an element of options that's gambling in a sense, right? But it's my job as a provider in Wealth Squad to educate you in a way that you're informed. You have a basis for your decisions. You have a foundation to build on. That's my job. That's what I'm doing for you guys. I'm not always right, but I am right quite a bit. And look, seeing you guys win on those trades and put in the work and have it resonate with you, it just makes me go harder for you. I say this all the time, man. I see what I see and I pass the bread basket, and it's true. I can't always explain every time the way that I see it. It's just like playing sports, playing basketball. I know in a split second when a person walks into the gym whether or not they can hoop. Why? Because I've been around the game for 40 years. I've been playing since I was a kid. I just know. It's the same thing for what you guys do in your professions. It's the same thing what you guys do in your own athletic endeavors. You know in an instant whether or not somebody's good at something based on their demeanor, the way they carry themselves, their attitude, their personality, their charisma, all these things. All of these things are telltale signs of success. So when I see those things from you guys, it just makes me go harder for you and finding profitable things to help you guys succeed. Tyler says, "Am I still holding Zim?" Yes, I still have it. I'm not going to make a decision until tomorrow or Friday on Zim and LPG. Nem is still a good trade. APD getting smacked. Lone Wolf says, "I was wondering, how do you know what option date and price to get into?" So this is a good question, given the circumstances we're talking about. So the trade that I suggested was the March 15, $16 calls. Now, the thing with this is that you don't have to have the share price hit that option strike price. It only needs to move towards it, right? But what I'm really looking at is a couple of things. First and foremost, what strike you get into is really based on your budget. It's what you can afford. But sort of a a sort of a alternative to that is you need to look at volume. I'm looking for 3 to 4 times the amount of volume for open interest, right? Open interest is the amount of contracts that are still open from the day before. I want the volume to be 3 to 4 times that amount, or the open interest to be 3 to 4 times the amount of volume. And volume is more important than the open interest because without the volume, your contracts won't move. But in this scenario that I was talking about earlier, that at minimum, if I were to swing trade Hewlett Packard, at minimum, this could go back to 17, 16. And it's already at 15. When I saw it, it was right around 1504, I believe. So already seeing it at 15, you can, that in the money call, which is going to be the $15 call, it was like 5 cents away from being in the money. So for me, it was about stretching it out. But I noticed that there was a lot of buying power that was starting to happen with Hewlett Packard on that $16 call, which is why I got into it. And I generally look, 3 to 4 weeks out. You'll never you'll always lose far more money in the stock market by trading weekly contracts than you ever will trading monthly contracts, right? When you're looking 3 to 4 weeks out. If you trade weekly contracts, if you don't know what you're doing, you can get smacked really quickly. You can lose everything. But if you want to play it safe but a little riskier, give yourself a couple of weeks. And the thing is give yourself a couple of weeks. And the truth is like if it hits your targets in a day, awesome, good for you. It did what you thought it would do. Get in, get out, move on. You don't need to hold it for that 3 weeks. You can look, and if you're impatient or you're greedy, right? Say you bought 10 contracts, sell 9 of your contracts once it hits all of your targets and leave the other one to go until expiration. Or leave 2, sell 8 and leave 2, right? Take the majority of your profits at your profit targets. Don't get stuck holding the bag. When you see it break in the, and as it climbs higher to the upside, raise your stop loss. Raise your stop loss higher as a way to protect your capital. Now, I don't really use them all that much. I pay attention to support and resistance. And if it doesn't break those levels, that doesn't make with the average true range in the price action, if it's not possible for the trade to come back, adding all of those things, then I get out. But if it's still within those parameters that it could still come back within a week or 2 weeks, I have no reason to exit the trade, regardless of if I'm down 40% or 50%. Doesn't matter. because it still has an opportunity to come back. And maybe I just average down on the momentum upwards. There's all different kinds of options, but I don't just get out of trades just to get out of trades. I make sure that I have an understanding. It's not just about my budget or my 30% stop loss. Most people don't understand why they have a 30% stop loss. It's just, oh, I don't want to lose 30% of my money. Well, that's not good enough for me. That's not a good enough reason. I want you to go deeper than that. What's the reason why you chose that 30%? Does it even correlate to the chart? In options, chances are it doesn't, because there's so many variables. So just make sure that when you enter trades and when you exit trades, it makes sense, right? It's got to make sense. If it don't make sense, it don't make sense, right? Spelled differently each time. If it don't make sense, SENSE, it don't make sense, CENTS. Y'all can write that down, right? That's how I look at it. Seth says, how do you add ATR to your charts? Go into your indicators. You can do it on stock charts too, where the indicators are. Come down here. Let me just save this real quick, or not save this, but yeah, you can come down to the indicators on stock charts or the overlays. Oh no, indicators. Underneath the overlays, put in your average true range, market at 14 days, and hit update. That's how you do it on there. And then you can do the similar thing on TradingView by going to your indicators, and then just mark it as your favorite once it's there, average true range, and it'll add it to your chart. Said if she would have bought it at 500, how much would she have? I don't understand 500. What up, y'all? I'm just going through the comments real quick, just trying to breeze through these. Elijah said you referenced someone's IG when talking about the money factors. Who was it again? That's Gerald Peters, Full Auto 11 on Instagram and YouTube. Gerald Peters. Mel says, so resistance is a target. Yes, all of the resistance is a target. You just need to determine whether it's a strong resistance or if it's if it's a resistance of like only two candles are going through it, I don't really pay attention to it. It's going to blast through that target. It's weak, right? I try to find the resistance where 5, 6, 7, 8 candles are sitting on it. That's a resistance. Hell yeah, KD. KD says, bro, I was down 30K in November. I followed your lead and I'm up 50K. Let's go. Let's go, man. Let's go. Sora Pruis says, why 25 to 30%? Is that a number you placed for yourself? For me, if you set your targets at 25 to 30%, it's a pretty good gauge. Most stocks start to hit resistance around 25 to 30%, if you notice, if you've studied them long enough. But 25 to 30% is a solid trade. If you really think about it, the market returned 28% last year. Before that, it was like 16 or 18, I think, the year before. So if you're taking 25 to 35% on every trade every single day, dude, you're going to blast the market. You're going to steal so much money from the market every year if that's what you're doing in increments. And the thing is you will make more money in a shorter period of time by taking 25 to 35% profits, compounding that, than you will by waiting for the 100% bangers. Your portfolio will grow faster than that person's over time, period. It's a fact. If you don't believe me, try it. You'll see. That's why I do it. It's a pretty good increment. And the thing is if you're too good to take profits at 10%, you're not good enough. You're not worthy of 100% banger. You don't deserve to take those profits. You don't deserve to get those plays if you're too impatient or you're too good or you're too above 10% or 15% or 20%. If that's too good for you, then you don't deserve the banger trades I give you, right? There's levels to this stuff. Jarrell says, I'm struggling to know how to start. I've watched 90% of your videos and now I'm like stuck on what to do now. Gerald, I'll say I have a pinned message in the research admin where it talks about all of the videos to watch in order if you're, if you're just starting, if you're a beginner. Go back and watch each one of those until it clicks for you fully. And if you're lost on it or there's things that you don't understand, I want you to tag me in the Discord and I want you to let me know so I can help you through it and help bridge the gap for what you're unsure about. Tony Smith says, "Do you have a site for practicing options trades?" Tony, you should be able to paper trade in all of the apps. Robinhood, Webull, your brokerage. You should be able to paper trade. That means you're not using your own money, where you can test your own theories. Start paper trading if you want to. My theory is like, I don't paper trade. I think you're better off just using your real money because it's not the same if you're just paper trading because it's nothing of value to you. It doesn't matter, right? If you lose, it doesn't matter to you. You're not going to feel it. Use your own money, but use money that you're not willing to, or you're not okay with, pissing it away, you know? Um, and says, how do you calculate how much taxes you'll pay for this particular options trade? So all of your options trades are taxed um, at a short-term capital gains tax, which is all based on your income. But there's usually a capital gains tax anywhere between 25 to 35% of your trades, or 20%. I gave trainings on the tax stuff. I think I'm going to do another one before. I'll probably do one next month, prior to all the tax stuff, so that people understand what they should be setting aside for their taxes. But if you hold your trades for longer than a year, you pay short-term capital gains tax, which is only usually 15%. And if you take the profits within a year, you will always get taxed at the short-term capital gains tax, and that goes for the same for options trades. It's high. It's not little tax. It's a lot. You just need to make sure that you're setting it aside. Alexa says, "Is there a video on stop losses on Webull?" I've done a whole training for you guys in the Wealth Squad on stop losses. Go back and look at in the research admin at the Google document. Kayla says, "Do you think supply and demand is a good strategy to trade with?" Yes, because that's essentially what support and resistance is. Same thing. Robert says the Wealth Squad offer a class on how to use the stock charts, how to set those pricing targets. All of it's pinned in the research admin channel for you. Quincy says, Mike, do you have training classes like Key? I don't have a published course. I got stuff in the pipeline. I just haven't made it available to the public. Maybe that's something I do this year. If y'all really want it bad enough, I'll release a public course. Britt says, when will I start mentoring? I just opened up dates last weekend. Um, I don't know. I'll open up some more dates. I usually try to do it every week or every other week or something, at least a certain time within the month. If you guys want, if you're interested in the mentorship, the one-on-ones, that sort of thing, you can just DM me. And it always helps me by DMing me, it always helps me to remind myself to open up more dates for people. Um, Jose, Eddie Bales says, can you write off losses? Yes, you can. If you notice at the end of the year within the market, a lot of people sell off a lot of their stocks. It's called tax loss harvesting. It basically means it enables them to not pay such a high capital gains tax by taking a loss instead at the end of the year and then rolling those losses into next year's. Um, so I think I'll do a training on that because I haven't done a training on the tax loss harvesting, but I'll do a training on that for everybody because I think it's important. Jeff says, how am I finding the tickers to plan on getting into? It's through all of the screeners that I've given everybody in the research admin channel and on that Google Doc with all of my trainings. I've given my screeners away several times. The same ones that I use and regurgitate every day over and over and over again. I use my screeners probably, I don't know, probably 20 times a day within the market hours of just scanning it, refreshing it every hour, every half hour to see what's coming out of the woodwork. Anyhow, y'all, if I those are my thoughts for tonight on Hewlett Packard. Shout out again to Nora Wolf who hit on that massive trade. Look, and I'm telling you, there's always going to be another one. You could be next. She did it. Why can't you? Why not you? Why not you? You're totally capable of it. So if I missed your questions or there's things you're confused about that aren't clicking for you, tag me in the Discord and I'm happy to help bridge that gap for you. Anyhow, y'all, have a good night. I appreciate you tapping in with me.